Based on the gross profit margin graph, we can see that company YSP Southeast Asian is higher than Apex Healthcare. That means it effectively controls its production costs and has a healthier financial position. As we can see, both companies did not experience significant fluctuation from 2018 to 2022. Based on the graph of operating profit margin, we can see that YSP Southeast is higher than Apex Healthcare in 2018 to 2022. Apex Healthcare is higher than YSP in 2021, but in 2022, operating profit margin of YSP increased significantly. That means it is efficient in controlling its operating expenses and is more likely to have sustainable business model. Based on the graph net profit margin, we can see that YSP is higher than Apex Healthcare in 2018, but decreased in 2019 to 2022. From 2019 until 2022, Apex Healthcare has a higher net profit margin. That means Apex Healthcare has a better ability to generate profits from its operation. Based on the graph return on asset, we can see Apex Healthcare has higher return on asset than YSP Southeast. It indicates better utilization and efficiency. An increase in total asset can result from factors such as business expansion, acquisition, or increased investment in capital asset. Based on the graph return on equity, we can see that Apex has a higher return on equity than YSP Southeast. A higher return on equity may be attributed to improved profitability and operational efficiency, indicating that a company is generating more net income relative to its shareholder equity.
Based on this current ratio graph, we can see that YSP Southeast Asian is higher than company Apex Healthcare. As we can see, for both company will decrease in year 2020 because of increase in current asset and also increase in current liabilities. When current liabilities also increase, it can affect the percentage of current ratio. Based on this quick ratio graph, we can see that the company YSP Southeast Asian is higher than the company Apex Healthcare. In 5 years operation, the highest quick ratio is the better one. An organization can be more liquid and generate cash rapidly. In an emergency of it, quick ratio is higher. This average collection period graph, we can see that the company Apex Healthcare is lower than YSP Southeast Asian. It is normally preferred to have an average collection period duration in excess of 60 days, as this indicates stronger liquidity for the business. The receivable turnover ratio, an additional liquidity metric, is also computed using the average collection period. For this account receivable turnover graph, we can see that the company Apex Healthcare is higher than company YSP Southeast Asian. As we can see, in 2020, both companies have the highest amount. It is better when the company get the highest amount in account receivable turnover. It indicates that your client are making timely payments and that your business is adept at collecting. The last graph in liquidity is inventory turnover. Based on this graph, the company Apex Healthcare is higher than YSP Southeast Asian. For inventory ratio, it also decreased in year 2020 because cost of goods sales did not increase too much as a result of not being able to sell many products in the year due to COVID-19.
Based on the graph, it shows that the total debt ratio for Apex Healthcare from 2018 until 2022. There is a downturn from 2018 until 2020 and a slight increase in 2021 before it is decreasing in year 2022. There are a few factors that can affect the debt ratio, such as debt repayment, profitability, and financing, economic conditions, and others. Overall, the graph shows a good debt ratio as it is indicate that Apex Healthcare is able to repay its debt actively and improve its profitability. As for YSP Southeast Asia, the graph shows a slight increase from 2018 until 2019, before decreasing in 2020 until 2022. Compared to Apex Healthcare, YSP Southeast Asia is comparatively lower in debt ratio, which shows that the debt of the company is better and they can repay the debt better than the other one. Based on the graph, it shows that Apex Healthcare times interest earned is going up steadily from 2018 until 2022. Meanwhile, YSP Southeast Asia is experiencing deterioration from 2018 until 2021 and going up on 2022. There are few factors that can affect the times interest earned, such as company's risk profile, capital structure, and economic conditions. Higher ratio can be considered generally better, as it suggests a stronger ability to cover interest costs. Based on the result above, it means that Apex Healthcare have higher ability to cover its interest costs compared to YSP Southeast Asia.
Based on the graph, it shows the decrease by both company in 2018 until 2021 because of the changes in market demand and economic downturns. Then it begins increasing in 2022 with small amount of 3% of Apex Healthcare and 6% in YSP Southeast. So overall, YSP Southeast has a higher total asset turnover than YSP Southeast. Based on the graph, it shows the decrease from 1.03 in 2018 to 0.95 in 2021 and begin increasing by 27% in 2022. The decreases in 2018-2021 can be contributed to recent investment in new equipment. So overall, Apex Healthcare has a higher fixed asset turnover than YSP Southeast.
Based on the graph, there are Apex Healthcare and YSP Southeast price earning ratio. In 2019, Apex Healthcare had a higher price earning ratio, and it shows that investors are willing to pay a higher share price at that time due to growth expectations in the future. It tells us that the investors were willing to pay 72 cents for every ringgit of earnings per share. The high multiple indicates that investors expect higher growth from the company compared to the overall market. A high price earnings does not necessarily mean a stock is overvalued. Any price earning ratio should be considered against the backdrop of the price earning for the company's industry. Based on the graph, there are Apex Healthcare and YSP Southeast market to book ratio. In 2019, YSP Healthcare had a higher market to book ratio, and it shows that the market value of the firm's share is greater than the book value or the accumulated investment in the firm's equity. Clearly, investors believe the stock of Apex Healthcare is worth more than the accumulated investment because they are now paying 7 ringgit 79 cents for each ringgit of book value.
Lastly, for the conclusion, in summary, our financial analysis suggests that Apex Healthcare is a better financial position than YSP Southeast. Also, Apex Healthcare has shown improved profitability level, including higher net profit margin and return on asset compared to YSP Southeast. Additionally, Apex Healthcare has maintained a low debt to equity ratio and has shown a strong ability to cover its interest, expand indicating efficient use of equity capital to generate profit. Okay, next. The company market value has increased, reflecting investor confidence in the company and future growth potential. while YSP Southeast has a larger market capital and company Apex Healthcare rising price to earning ratio suggests that investors are willing to pay a higher price for the stock due to the future growth prospect. However, it is essential to also take into account industry and market trends when evaluating the financial health and performance of these companies.